Hello, everyone. I'm Anita Sharma. Welcome to Market Call tonight on B&M Bloomberg. Our special guest is Kim Bolton. He's the president and portfolio manager of Black Swan Dexteritas. He's taking your calls, emails, and tweets on tech stocks. Our number toll-free, 1-855-326-6266. Our email address, marketcall@bnmbloomberg.ca. Our Twitter handle @Market Call. Kim, it's been a long time. How are you?
Terrific. A long time is about 5 weeks.
There you go. It's a long time in the news business. A lot can happen in 5 weeks, and a lot can happen in a day. My goodness, Dow Jones Industrial Average off triple digits, more than 300 points. Another week reading, this time on our side of the pond with respect to the factory index. What, the lowest, the weakest reading we've seen in 10 years' time. Does that spook you? How do you trade something like that?
Well, it certainly spooked the market,
yeah,
because you got the S&P 500 closed under the 50-day moving average,
wow,
which is going to get some good press tonight. Are we surprised? We're not surprised. However, when you look at the market over the last, oh my gosh, you can even go back to last January. You know, the S&P 500 is only up about 2%.
Right.
Since January 2018.
Wow.
But look at all those gyrations, and the corrections, and major corrections we've had.
Volatility certainly was the name of the game.
Yeah.
Let's just, you know what, your mic, let's just pop that up a little bit. There you go. There you go. Professional Kim Bolton. So to your point.
Yeah, the market, the way we see
Okay,
it.
Kim.
Yep.
That was a temporary reprieve. What we're going to do is take a break. We're going to fix that mic of yours, and we're going to come back. Folks, stay tuned. Welcome back. Our apologies. We're all sorted out now, and we were talking about tech being your specialty and what's been happening with tech as of late. We did get that weak number in terms of the factory index, certainly not boding well for the world's biggest economy. You said the markets are spooked, but are you?
No, not at all. You
know,
we have the great fortune of being a hedge fund, so we can be long, we can be short. You know, really for the last, almost since the beginning of this year, we see it as sort of a transition between playing the market from the long side and playing it from the short side. And actually, we've been net short for the last 3 months.
Okay.
So, mind you, we still have a long positions of single stocks and ETFs in the portfolio. So as the market goes up, we actually benefit from that, not to the same degree, but when the market is correcting, we're protected. And in days like today, we were up 0.5% today.
Oh, wow. Good for you.
So we have some leverage when the market goes down. So we just think that the market is in a bit of a correction phase.
Okay. Before we get to our calls and our emails, I want to get to a couple of, I love it when you bring your visual aids, and you've got some ideas with respect to how the rest of 2019 is going to play out on the tech front, some strategies, if you will. Can you elaborate on those for our viewers?
Do you want me to go? Oh, okay.
Yeah.
So we see the remainder of the year as having the same volatility that really you've had for the past 12 to 18 months. Yeah. And so you're going to have up days and you're going to have down days. But I think over the course of the year, look at the S&P. The S&P is up 18% year to date.
But to your point, since last year, not even just about 2%.
Exactly.
Unbelievable.
But I think you're going to have some volatility. So it becomes less of an investing market and more of a trading market out there. And so you have to be very fast. That's why at the beginning of the year, we actually took some of our single stocks and put them into ETFs. And so of our long book, we have about 2/3 of it in single stocks and about 1/3 of it in ETFs. Why the ETFs? Because it gives us that flexibility to be able to nimbly move in and out of positions.
Okay. I also want to get to, you touched on a little bit with respect to your strategy and your tactics for the rest of it. Only a few months left in this year. Unbelievable. You're also somebody who looks at trends as they relate to tech. And I'm not actually surprised by this one, but our viewers may be. Real estate's been hot. Real estate's been hot for several reasons, and especially if you live in big markets in Canada. But digitization in this area, is it fair to say it's been rather slow to the mark in that area?
Absolutely.
And so you see some room for movement, some growth here?
Exactly, and I do have a graphic.
We do,
here.
yeah.
There we are. So we always look, we have an investment advisory committee of investors and shareholders, but the common thing amongst them is that they're all very successful tech entrepreneurs. And they always ask us to look down rabbit holes within the technology arena. Right. And one of them that came up really at the beginning of the summer was into the real estate industry, because it is one of the last few sort of traditional bastions that has not been digitalized.
Absolutely, yeah.
But it's starting. And it's really sort of started a few years ago outside of North America into an area called prop tech. So I looked this diagram here, and this is really all about the digitalization of the real estate industry. So if you go from 12 o'clock to 4 o'clock, those are all the traditional sort of real estate agencies around. And then you have this emerging area called prop tech, and it's been around for a few years, where people have come in and have digitalized. Look at that one right there. It's sort of right at about 8 o'clock, called Realogy. Have you ever heard of Realogy?
I've not, but Purple Bricks I have.
Yeah.
That's certainly one that a lot of Canadians are starting to familiarize themselves with.
Yeah. Well, Realogy, one of their biggest benefactors, shareholders, is Amazon.
Okay, there you go.
So they brought into their fold an enormous number of real estate agencies down the United States, and then they're showing them how to digitalize it. And then you go up, and you go from sort of 8 o'clock up to 12 o'clock.
The prop tech disruptors.
Those are all the disruptors. And what you have in there are companies like Redfin and Zillow and Compass.
Open Door.
And Open Door, which are really in the iBuying business. So it's really where you get into the mobiles and you get into the digitalization, and buyers and sellers can go off apps on there. We believe that this has a long, long runway, because you can get iBuying, but imagine if you could actually do your mortgage online on a mobile app. It's coming.
Yeah, I'm sure a lot of folks would believe you on that. If you can do pretty much everything else online, why not that? In fact, I believe I've seen advertisements in the States with respect to that. Very good analysis. Thank you for getting the show started there. Let's swing right into an email now. Okay. This is from Amy in Calgary. She's curious about Alibaba, Baba on NYSE. She says she's down significantly. Should she sell now, Kim, or continue to hold on? You did say it's going to be volatile for some time yet, right? Overall, the sector, the markets.
Thanks, Amy, for the email. Alibaba, we actually, Amy, we picked up Alibaba. Oh, here we are at the beginning of October. We picked it up sort of the second week of September. And the reason for it is that we just see a great opportunity for appreciation. When you actually look at Alibaba, the the valuation of Alibaba is around $600 billion, but that represents about a 30% upside based on the current price right here at $165. They just had an investor day just last week where they released their 5-year outlook, and they're really, really going to be focusing on the domestic side in China, and that's their growth potential that they're going to have in there. And besides which, yes, it's been beaten down, but it looks a heck of a lot cheaper versus the competition. Probably the poster child in this space is Amazon. Amazon's PE is sort of around 74.5, and the PE on Alibaba is about 32. So it's actually cheap, which isn't that surprising considering all the headwinds of the trade wars that are going on.
Absolutely.
But I think it's a great opportunity to buy into it.
Okay, so that's your final word. Buy into it and continue to hold on in Amy's case. All right, Kim, thank you so much for that. Let's take a break here on Market Calls tonight. We'll come back with Kim Bolton. He's the president and portfolio manager of Black Swan Dexteritas. We are on tech tonight. Calls toll free 1-855-326-6266. Welcome back to Market Call tonight on BNN Bloomberg. Let's get to the phones, Kim. Let's bring in Michael from Montreal. Hi, Michael.
Hi, Anita. How are you?
Doing well, sir. How are you?
Not too bad, not too bad. I just wanted to thank you guys at Market Call for being such amazing people. You guys really helped me out with my trading, and it's really fascinating.
That's what we love to hear. Thank you for sharing.
My question is, I have a question on tech stock. I wanted to invest in it for a long time.
Okay.
And you have the specialist right next to you. Texas Instruments. It's had a huge run over a long period of time, and I've always wanted to get involved in it. I finally sold my shares of IYR this morning.
Of what, sorry?
IYR.
I sold my IYR this morning.
Okay.
And I diminished my size to 10%. I had 60% of my portfolio invested in it. And I really love Texas Instruments.
Okay.
And I want to understand, do you think that there is more upside to this amazing run that it's been on? And if not, should I just throw my money in Microsoft?
After all of that. All right, Michael, thanks for calling in, and thanks for your kind words.
Michael,
keep doing well.
Michael, nice call on the IYI.
Yeah.
It's a great question. You know, when you look at the price action of the market overall, you know, a lot of the smaller mid-cap technology stocks, especially in the software space, have really been dragged down lately. However, the larger cap, not surprisingly, here we are later in the business cycle, is a good place. And actually, I do like Texas Instruments. We don't own it right now because it's actually trading at our market at our price target of we actually had a 12-month price target of $129.
Really?
So we're out, but I would actually buy it if it sort of comes down into the teens, and I'd buy a third in the teens and probably a third down, you know, between 100 and 110. The other thing that I like about Texas Instruments is that it, together with names like Apple and Intel, have you know, around a 2.4 to a 2.5 dividend. So it gives you a little bit of protection there during these volatile times. So, Michael, I would gradually move into it. I think you can buy some time. You can get a little bit cheaper. I think the correction that we saw today is going to have a little bit more legs. And you can buy it down sort of in the teens, 119 or whatever, and then buy a third there and buy it a little bit more below.
Okay, Kim, thank you for that. Michael, thank you for your call. Let's get back to the phones and bring in Don from Ottawa. Hi, Don.
Yeah, thanks, Anita.
You bet.
Kim, I had a very small position in Cisco. I've got a number of tech stocks, but I opened up a small position in Cisco with the idea to add it on dips. In fact, today I was going to add a few more, but I'll wait till tomorrow, and depending on what you say. Or would I be better to get into an ETF at this time of the year. I appreciate your comments. Thanks.
Thanks, Don. Yeah, Cisco off $1.67 today.
Thanks, Don, for your call. Cisco is in our, if not the top 5 of our portfolio, certainly in the top 10. And we've been buying it all along. Here it is sitting just shy of 48. Don, we actually have a price target on, a 12-month price target on this of $56. So there's still some room. And so I would buy a little bit here, and I think you can probably buy it a little bit lower also. And so I always, you know, when you have an idea and you want to buy into something or you want to sell into something, I always recommend doing it in thirds. And so do a third, a third, a third, and you know, maybe buy some here, buy it lower down in the 40s, and maybe if you get a chance down in the 30s, because our average price in there is sort of the middle 30s. I don't think you'll see it, but it's a fantastic networking, servicing company to the hardware industry, and they've actually made some great transitions and have become a leader over in the cybersecurity space too. So they've diversified.
Okay, Kim, thank you for that. Don, thank you for your call. Let's bring in Peter now from Vancouver. Hi, Peter.
Hi, great show.
Thanks, Peter.
Great and wonderful host, Anita.
Thank you.
And the great host, the expert in technology. Kim, I am thinking of starting a position in AMD. However, there are a few things that worry me. Lately, there's a strict rotation from tech to value stock.
Right.
How is the other thing is the spending on the semiconductor field. Can you please give me your expert opinion? Thank you very much, Kim.
Thanks for calling, Peter. Yeah, great points he's making there. Let's start with that rotation.
Thanks, Peter, for your call. In the rotation, you know, you had a very significant rotation going through August and September out of the software.
Yeah.
And, you know, when we look back, we may say that was the canary, right? That was the canary in the coal mine. However, you know, when you still, you know, you've had a correction of, you know, if you look at the IGV, which is the ETF for the software space, it's corrected about 11, 12%, but there are some fabulous companies in the software space that are off 20, 25, 30%. And we're actually very carefully looking at and I have some stocks that I wanted to talk about in the top picks later on in that space. So I don't think, and you could see it today, what the S&P was off over 1%, the NASDAQ was off 1.5%, but even the IGV was only off 0.5% today. So I think the correction that you've had in the software is not going to follow the rest of the market. Now, AMD, I think it's a great choice. You know, a lot of the chip suppliers, the AMDs out there, and even the equipment makers like the Lam Research or the KLA, they really have learned a lot from previous corrections and how to manage these corrections, you know, between the NAND with the memory and the battery and the DRAM side, and they've been able to manage that side. So they become a much more mature business, and the management has become much more mature in it. So again, I think on the AMD, we have a price target here, a 12-month price target of 51.50, and I think it's worth buying a little bit into it here. Yeah.
Okay. All right, Kim, thank you for that. Let's take a break. We'll come back with Kim Bolton and his past picks. Stay tuned for that. Welcome back to Market Call tonight. We are with Kim Bolton. Time now, sir, for your past picks, and we'll start off with a behemoth. In fact, I think about 2 of the 3 are behemoths here. Amazon returning you a nice 9%.
Yes. We actually we have it's currently just over 1,700. We still have a 12-month price target on this of $2,100. You know, this is just primed for continued growth. They have a piggy bank called AWS, which you know, it's a first mover advantage, can't be understated. And then they have all these other businesses, but especially on the retail side with Amazon Prime. And even with AWS, you know, the total addressable market potential of these segments is unlimited for them. So it's very difficult, and that's why, you know, it has a PE multiple of where it is right now of 74 times. And, you know, even in the latest quarter, they showed a big win in the subscription side, and even better. You know, one of the things, Anita, that I like about Amazon is if we go into a correction, heaven forbid a recession, all they have to do is just work on their margins. They don't have to look to their revenue. They can actually expand their e-commerce margin side of it. So even going into a correction, it'll get hit, but you'll see it from quarter to quarter that they'll do fine.
Off just 25 cents today.
Yeah.
Given the turmoil, off just a quarter.
Well, it's you know, it's our #1 holding in our book.
For a reason.
Yeah.
All right, let's get to something even better here. Visa, the stock comes up a lot here on Market Call tonight, earning you a nice 27% return. Had our viewer purchased this when you recommended it on Halloween last year. Nothing spooky about that return, though.
This is also in our top, and it still is in our top 5. You know, as Warren Buffett would say, you cannot go wrong with a company that has a monopoly in a segment. And you know, there are other players of MasterCard and PayPal and Square and so on, but they have all the ingredients for success. They have this monopoly, they have high profit margins, they have a phenomenal, significant amount of free cash flow, and a pretty stable growth trajectory. And on top of that, they have routine buybacks, they have dividend growth involved in it. So it's just got all the ingredients for winning.
Okay.
For a winner, and it still does.
Let's go from a winner to a loser now. Ericsson, you're in the hole here, down by about 7%. Is this a stock? I believe you're not holding on to this anymore. Is that correct?
Oh no, we bought more.
You bought more of Ericsson?
Yeah.
Okay. So you're doubling down on this.
Well, no, we bought it right around 8.
Okay.
We bought it again at around 8.5 when it was going up, and then when it came on this correction, we bought it again down at 7.25.
Okay.
You know, this is Nita. This is all about the 5G deployment, which is very aggressive in the U.S., but other countries are jumping on the bandwagon. One of the big telcos out of Japan just announced that they were ramping up on the 5G over in Japan, KDDI, and they took the 2 winners. You know, there are 3 players in the hardware space on the 5G. There's Huawei, there's Nokia, and Ericsson. You can't buy Huawei; it's private and state-owned, and so we buy into Ericsson and Nokia. We took some profit on Nokia and actually put it back over into Ericsson. The reason it's down is because they ran into some litigations and they took a haircut when the Department of Justice came out, and they revived an old 2013 and 2015. But when you actually work, and they've set aside $1.2 billion to actually pay for that litigation. So that's why it's actually come down. I think it's a great opportunity to buy it here.
Okay, buy the dip here on Ericsson. All right, Kim, thank you so much for this. Overall, a total return average of 10%. Well done. We'll take a break and come back to more of your calls, folks. 1-855-326-6266. Welcome back. We're with Kim Bolton. So far, so good with the calls. Let's bring in Dave now from Toronto. Hey, Dave.
Hi, thank you for taking my call.
You bet.
My call is about Broadcom. I wanted to ask Kim what he thought about the name. It's a really big semiconductor name, so it gets looped into semiconductors, but it has so many different lines of business.
Right.
I wanted to ask Kim if he held this stock, if he would buy it at this price, because there's noise that Apple might not continue with Broadcom anymore. So I was just wondering what he thought about the name for the long term, because for me, I like it because it's a dividend grower and it's in the technology space and it's well diversified, I feel. But Kim is the expert, so if you could tell me about the long-term horizon for this company. And can I get street consensus as a price target? Thank you.
You bet. Thanks, Dave.
Thanks, Dave. It's interesting. We've been looking at Broadcom lately. What has happened lately is that they just did a 8% convertible preferred offering. And it's created some volatility in the stock lately. And yes, we'd like to buy it. It's trading around, what, $275 right now. We have a 12-month price target there of 320 to 325.
That's in line with consensus,
Yeah.
318.
But we think you might be able to get it cheaper, closer into sort of the 250 area. And so again, I do a third, and I think you can, Dave, I think you can get a little bit cheaper. On that subject though, Dave, one I'd recommend you look at that's really had a haircut lately, and I think undeservingly, is Micron Technology, because they got shellacked last Thursday night and the stock is off over the course of, what, 3 trading days, 15%.
Wow.
And I don't think it's just, you know, they did bring down the guidance a little bit, but the management has been there for a good long time. They've been able to manage the cyclicality of the industry. People are worried about the NAND side, which is the memory and the battery storage side. But there is strength at Micron on the DRAM side, which is not the memory and the battery side. So they have a nice mix within there. And I'd suggest, Dave, that maybe look at Broadcom down in the 250s, but you know, I'd look at Micron, which is trading, I believe, just right around $50, but we got a price target on that. Oh, there we are, $42.
Thanks, guys.
Yeah.
We're listening to
$40. We've got a price target on Micron of $58, and so you can see how it's really taken a shellacking lately, and I think it's a great opportunity.
All right, there's a comparative chart, Micron.
Very good.
Yeah. Let me give the consensus on the Broadcom side, because Dave did ask for it. We have 20 buys, Dave, 11 holds, no sells, and again, the 12-month price target just shy of where you're at right now at $318. Dave, thanks for calling in. Let's get to a tweet now, Kim, from Arun Achapali. It's about Apple. He says it was up on a brutal day. Yeah, it was a brutal day today. So close to its all-time highs. Will it rocket up to over $250? What do you think of Apple?
Thanks for your call. I don't know if it's going to go to 250, but we don't own it, actually, right here. And we sold it right around 218 on the way up here. And we think we can probably buy it down sort of between 200 and 210 and just sort of scale into it there. It'll be interesting going into the earnings season, which is only in a couple of weeks. And
Unbelievable, yeah.
To see how their service is. It's not so much about the iPhone 11, although has got a lot of press. It's more about the services, how the Apple TV is doing, Apple News, Apple Card, Apple Arcade, and also the wearable side. I just think it's a bit rich here, and you can probably buy it a little bit cheaper.
Okay. Thank you for that, Kim. Let's round this segment out with Eric from St. Albert, Alberta. Hi, Eric. Eric, are you there? Okay, we know Eric is curious about JD.com.
Yep. Eric, this is, well, for those that don't know JD.com, they're China's largest online retailer, and it's the biggest overall retailer in China. They have a solid core with continued upside, and as the focus from the government is on the domestic consumer, we believe JD.com will do wonderful. We got a price target on this of $42, and it's currently trading. It's cheap.
Okay. Kim, thank you so much for that. Let's take another break here. Our market call tonight. We'll come back with Kim Bolton, President and Portfolio Manager of Black Swan, Dexteritas, and more of your calls on tech straight ahead. Welcome back. We are with Kim Bolton. Let's get back to the phones. Kim, Bill in Barrie, Ontario. Hi, Bill.
Hi. Thank you for taking my call.
Of course.
I would like Kim's opinion on Universal Display.
All right.
And is it a buy at this level? Thank you.
All right, let's find out. Thank you, Bill.
Thanks, Bill. For those that have followed us here on the market call, you'll know that I really, really like Universal Display, but you'll be surprised, we're not in it now.
Okay.
It's come down. We actually sold it just over, wow, my gosh, it was between 205 and 210. The problem with and a lot of people will say it's very, very cheap here at 165, and I've actually talked back and forth. I have an analyst here, one over in Tel Aviv, another one in Silicon Valley. And we go back and forth about this, and they've really told me to just sort of hold off because there's so much competition coming into this space. So for those that don't know Universal Display, they're the ones that, this is an iPhone X, and they're the ones that actually have the royalty on the screens. So any screen that has an OLED screen, and basically the OLED screen came out and it just narrowed the number of layers, and then but the picture is much better, and so everyone jumped on it. Apple and Samsung and even the Chinese. But you know, they've been around doing this for the better part of, I guess we probably have been watching it for almost 3 years. And so the competition is starting to come in, especially out of the Chinese community and the Chinese over in China. And so we've held back, and there are just better opportunities in the supplier side of the smartphones, particularly, for example, on the sensor side.
Okay. All right, Kim. Thank you so much for that. Let's get back to the phones. Bring in Karen from Toronto. Hi, Karen.
Hi. Thanks for taking my call.
Of course.
Facebook is trading at a reasonable price. So much growth with Instagram, and PEG ratio is 1. Would you buy it here for the 2 to 3 year old? Thanks.
All right. Thanks, Karen.
Thanks, Karen. Yes. The answer is yes.
And moving on. No, I'm just kidding.
It will be interesting going into, although going into the earnings, Facebook has been very good in actually giving any sort of warnings that is going on, so I think they'll be fine going into it. Here it is trading at just shy of 176. Our price target going out is 230 1 year hence. So we still see a long runway. And you know, it's not expensive. And you can see it on the chart. It's not that expensive. We look at the PEG ratio, and PEG ratio is at 1.38. And so I'd buy it here. Yeah, I'd recommend it. Okay.
And Facebook, once again, in the news. There are reports that Mr. Zuckerberg's having some issues perhaps with Libra. Some partners that were announced earlier, they perhaps reportedly could be wavering on support for Libra moving ahead. He wants to, launch this in the new year. Any thoughts on that?
Well, I don't think it was going to be a big contributor to the top or the bottom line. Just my editorial, I think it was a great thing that they did because it took the eyes off some other things that they're on the privacy side.
Right.
And everyone jumped on the fact of Libra, and then you don't hear them talk that much about the privacy side, except for Miss Elizabeth Warren, who is in a bit of a struggle with Mark Zuckerberg today. You know, I still like Facebook.
You still like Facebook, and you especially like it, I guess, at these current levels.
Absolutely.
Yeah. Okay, Kim, thank you. Everybody, thank you for your tweets and emails and phone calls. We'll do another round of calls next. Our number, 1-855-326-6266. Welcome back. We're with Kim Bolton. Let's get to an email now from Pat in Maple, Ontario. Kim, does Netflix have good growth prospects despite its overblown PE ratio?
Thank you very much for the call. We don't own it, but we've been following it very, very closely. You know, the reason is it's been down. It's down like 30%. From its earnings call just back beginning of September.
There's been a lot going on in this space, right? Yeah,
right.
Disney coming to the forefront.
Right, but you're right. It's not just them. They're getting a lot of competition. Yeah. However, if you just step back and look at sort of the big picture of this, you know, the whole disruption of linear TV, it's a big, strong secular trend out there, and it's not going to change. There are so many other international markets that are really getting into the streaming side. And this is exactly why you've got the likes of Disney and Apple and HBO that are getting into the streaming side of things, because there's lots of space there. We've been looking at it to get in, and we're pretty close. And so from a macro side, I think it has a long runway. There is more competition, but there's a great total addressable market for them. And they're a heck of a lot cheaper. On the PE ratio, they're a heck of a lot cheaper than they were 3 weeks ago. I'll have to look where where we have Netflix. Yeah, you know, the PEG ratio, even at this level, is 203. And we've got a price target on this of 12-month price target of $383.
Okay.
And that's, you know, with the trailing PE is very high, up above 100, but the forward PE is trading at, you know, the mid-40s right now.
Okay. All right, Kim, thanks for that deep dive on Netflix. Let's get to a stock now that sort of kick-started a bit of a conversation after your last appearance here with respect to Canadian tech stocks. Let's bring in Kate from Toronto. Hi, Kate.
The call. My question is on open text.
Okay.
I'm just wondering how you would look at this stock. It's $53.39 on the close today. How much lower could this go? Would it be an appropriate buy? I tend to think that we'll have a recession sometime soon. Soon can be a year, it can be 6 months, it can be whatever in between.
Looming, yeah.
I'm just wondering what you think about making a purchase. Would it be wiser to buy it in a couple of tranches? Is it a good stock to buy for, you know, for a period of time? And when would you anticipate that it could go down so that it's a more reasonable purchase range? And what do you think it could go up to in a better, more healthy market, if you will? And thank you very much. I do appreciate your description of your work, sir. You seem to be very, very much a valued guest here. Thank you.
Kate, you're a valued viewer. She's asking some fabulous questions there. She may have answered inadvertently some of her own questions, but take a shot at this. OpenText, has it sold off enough? Is it time to get in? Is a recession looming? What are your thoughts?
First of all, Kate, the flowers and chocolates are in the mail to you. Thank you very much. OpenText, you know, between OpenText and Shopify, you know, the phenomenal Canadian companies.
For sure.
We should be so proud of them. For those that don't know OpenText is it's a leader in the whole enterprise information management software space. Basically, they help digitalize processes for companies and supply chains through various analytics and AI-powered intelligence solutions, just to help companies make better, more predictable, more effective, efficient decisions. And they're recognized around the world on this. Gartner, who is the largest technology research analyst, has it as a market leader in this EIM space. Now, saying all that, you're probably saying, how much does Kim own of this thing? And we don't. And I think you can probably buy it a little bit cheaper.
Okay.
We have a price target of $62. And trading around 53, I think you can probably buy it in thirds, a third, and probably pick it up with a 40-something handle on it in the first third.
All right,
thank you very much, Kate.
I think you answered all of Kate's questions. Thank you, Kate. We'll come back with Kim's top picks. Stay tuned. Welcome back. We're with Kim Bolton. All right, top picks time. You mentioned this stock during the show, Shopify.
You know, we've been...
it's been volatile.
And we've been begging to get back into this, and it finally gave us the opportunity. You know, what truly makes Shopify stand out is the fact that there's a symmetry between its API, the application program interface, and the ease of using that on the one hand, while on the other hand, the API is not fundamentally restrictive. And so it's easy to use, but it has great many uses. And that's why small, medium-sized companies have just flourished with this company. And we actually have some sort of e-commerce tech entrepreneurs in our advisory committee that told us all about this Shopify many years ago, and so we got in, but we got out too early, and it gives us a chance. So yes, Shopify, you know,
it's sold off enough for you.
But here it is, 2019. You know, in 2016 it was $20 stock.
Unbelievable.
And
a lot of folks missed this one.
And then it went all the way up to just over 400, and now you've got it back in the low 300s.
Yeah.
I think it's a great opportunity. You know, why did it come down? It came down because they did that secondary offering, almost 2 million Class A shares, and then everyone sort of thought it was expensive. But here, the enterprise value of the company at 305 is $35 billion versus what we think the company is worth is $39 billion.
Okay, let's get to your second stock here, Datadog.
I love this stock. It's
I like the name.
It's have you heard of this one? So it's an IPO. I usually don't get involved in the IPOs. We didn't buy it, and we bought a little bit of it. We believe that you're going to be able to. So the company's flagship product is an infrastructure monitoring service. It's not very sexy. It's not like a Slack or an Uber, but it connects cloud applications with complex back-end networks. and it's just a fantastic buy. You know, this company grew revenues last year 79%.
Wow.
And so you just don't run into these companies very often. The last one I saw like this was MongoDB. And you know, MongoDB, it was a four-bagger within about a year and a half.
Wow.
I'm not saying that this is another one, but it's very distinct and it has a long, long runway.
All right, let's round this out. Minute to go. CyberArk software.
Yep. CyberArk. So this is all in the cybersecurity, but they have a little niche. Well, it's not a little niche. It's the privilege access management side of it. And so you've had the likes of, you know, the breaches from Marriott and Equifax and even Uber.
Right.
And they are a leader in this privilege access management side. It's a great stock. We have a price target on this of $150. And yeah, we just recently started buying into this back in September.
Okay, so you've been pulling the trigger on some purchases here. You're seeing some volatility. You're finding some opportunity to get back in. Shopify, I think that's going to be the takeaway from tonight. A lot of folks missed the boat many times around, and it has sold off. And to your point, I guess for a lot of folks, they could be looking to get back in the low threes.
You don't back up the truck, you just take a little bit.
All right, we're going to take a break and end the show. Kim, always great to see you, sir. Come back soon.
Thank you very much.
All right, folks, have a great evening. We'll see you tomorrow.